Hi, this is John Ariens with Mindful Advisory, bringing you a new edition of Driving Returns. Up this week is an article published by the Richmond Fed that Market Watch commentator Brett Arends wrote an article about. And the article is about interest rates. Everybody's waiting for an interest rate cut, of course, this September. The Fed has pretty much telegraphed it. But the argument of this article is that we shouldn't expect a return to the post-financial crisis era of zero interest rates, that's probably not going to happen again. Among the big reasons for why it won't happen again are that people are saving less, that's one, and two, um, the government is spending more, and investors are going to require a higher interest rate to hold U.S. Treasuries. And so interest rates will, we'll get the cut in September, but don't expect rates to go down to near zero again anytime soon. That likely won't happen maybe in anyone's lifetime. That was an unusual period from 2009 up to COVID. COVID seems to have changed that. And although we may get a slowdown here that will lower rates a little bit, going back to zero is not likely in the cards. What does that mean for investors? It means, first of all, that bonds are likely to yield something and maybe something over inflation. It may be a small amount over inflation, but what we call the real return of bonds may be positive again, and that's useful if you're a retiree and you need income and income that keeps up with inflation. What it means for stocks is less clear. I happen to think it's not good. My best guess is it's not great news for stocks. Higher interest rates mean that future cash flows get discounted more severely and the present value of stocks goes down. Uh, Gosh, what does all that mean? It means that the future profits companies make count for less today when you penalize them more with a bigger discount or inflation rate. And so stock prices may well go down or settle somewhere in a lower range than they've been since the end of the financial crisis. Um, no one can be certain about these things. These are my best guesses. But this is a very good article. It's a good read. And Brett Arends at Market Watch did a good job of summarizing it. So expect the rate cut in September, but don't expect zero interest rates again anytime soon. This is John Ariens for Driving Returns and for Mindful Advisory signing off. If you need to reach us, the number is 201-951-3509, and the website is mindfuladvisory.com. Thanks very much.